Hello everyone and welcome to Investing Angles. Make no mistake, the indices closed November with bullish signals, and the probabilities for a move higher in December are substantial. However, several technical developments aligned with our expectations could have a notable or even significant impact on the indices and potentially the broader market. Let's take a closer look and make sure to mark this study. Today, we'll spotlight the recent technical events recorded by Microsoft. While the bullish side of me hopes for the continued rally that remains a possibility, the bearish side focuses on the small details that often mark critical turning points. Let's have a look at the MACD chart. We have two of them, 15-day and 1 month, shown side by side. If Microsoft had closed at Friday's high, it would have avoided a monthly MACD bearish cross. However, it didn't, and the cross was recorded. This event is strikingly similar, both technically and in terms of candlestick patterns, to the one observed in March 2022. I've identified at least 10 technical parallels, but you could likely uncover even more. While it's possible for the MACD cross to reverse in the very next months, as has happened in the past, the current magnitude of the cross is significant. When a sling is stretched this far to one side, the stone tends to fly even farther. Candles and moving averages. I had to use two charts to better visualize the concerning event. Last week was troubling for Microsoft. Despite a notable rally and predominantly green candles, the tech giant recorded a rare and concerning event, a double bearish cross, with both the 50 over 200 and 100 over 200 daily moving averages crossing within the span of a single week. The last time this occurred was in March 2022, which, as you may recall, led to a significant loss of value. All I can note is that the cross in 2022 was not as aggressive as it is now. Could history repeat itself this time? Only time will tell. These are the crosses, 50 by 200 DMA and 100 by 200 DMA. So they happened all in 1 week. And this is the perspective. This is the cross that happened in April 2022, and these are the crosses now. Classical pattern, head and shoulders. And one more technical observation. Microsoft is nearing the formation of a significant head and shoulders pattern, which we discussed earlier in November. In 2022, as you can see here, the move following a break through the neckline was almost exactly the size of the head. It appears the pattern could repeat this time as well. This time we are not showing the Elliott Wave's perspective, as nothing has changed since the previous videos and articles on Microsoft posted on our site. Now let me summarize. Microsoft is currently aligning a series of bearish technical signals that could have profound implications for the stock itself and the broader market. Over the past week, Microsoft recorded a rare double bearish cross on the 50 over 200 and 100 over 200 DMAs, a development last observed in March 2022. Notably, the current cross is more aggressive than in 2022, adding weight to its bearish outlook. Additionally, Microsoft is nearing the completion of a significant head and shoulders pattern, with a potential breakdown projecting a move that aligns closely with the size of the head, similar to the pattern seen in 2022. Another concerning development is the confirmed monthly MACD cross, bearish cross, at November's closure. This signal is technically significant as it aligns with historical declines and adds to the bearish momentum. When combined with the other bearish signals, the MACD cross amplifies the probability of a substantial move lower. From a target projection standpoint, these signals suggest considerable downside risk. If the head and shoulders neckline is breached, the measured move could see Microsoft test critical support zones, with a broader bearish momentum potentially dragging down key indices. Impact on major indices. As one of the most heavily weighted stocks in the S&P 500, Nasdaq, and Dow Jones, Microsoft's technical performance carries significant implications for the broader market. Microsoft's approximately 1,200 weight in the Nasdaq 100, its substantial share in the S&P 500, and its key role in the Dow Jones make its trajectory critical. Any significant decline in Microsoft would likely amplify bearish sentiment across these indices, potentially serving as a catalyst for a broader market downturn. The alignment of bearish signals positions Microsoft as a potential harbinger for larger market moves, much like its role in 2022, when similar technical patterns preceded a market correction. Given its influence in all three market indices, Microsoft's performance next week will likely set the tone for broader market sentiment. Next week will be pivotal for Microsoft and the broader market. If the week begins with the green candles, it would strongly resemble the pattern observed in March 2022, where a brief rally preceded a sharp breakdown. Such a move could create a false sense of optimism while solidifying the bearish setup. Conversely, an immediate red start of the week would likely confirm a bearish trend, accelerating the move toward lower targets. The convergence of bearish technical signals in Microsoft, including the double DMA cross, potential head and shoulders breakdown, and confirmed monthly MACD bearish cross, strongly indicates heightened downside risks. Microsoft's weight in this S&P, Nasdaq, and Dow Jones magnifies its influence, with its trajectory poised to significantly impact these indices. The coming week is critical, with early action likely determining whether bearish momentum solidifies or temporarily abates. Microsoft's moves could very well shape the market's direction in the weeks ahead. Thank you. Subscribe to our channel and happy trading, everyone.